So seeing that idiot Richie, which by the way does not get referred to as the Ape Father out of my mouth or on this channel because he didn't fucking earn that title, he gave it to himself. Seeing Richie squabble with Lou, and Lou having nothing to do with Richie, which just gives me and so many other people such satisfaction because Richie is obsessed with Lou. Anyways, that's not the point. But seeing Richie and seeing some of the comments in some of the comment sections, it's becoming clear to me that, especially Richie, but some other people I don't think actually understand what a short squeeze is and how one happens. So let's get into it. Let's talk about it, because a lot of people, which I don't agree with, I fucking hate to say that I agree with the Ape Father, but I do agree with him on this, that nobody should be calling the MOASS or a potential MOASS or the squeeze with a time frame or even a broad time frame of, say, February to March, based off a hunch or what they're seeing, because the thing is, nobody actually knows when it will happen. The undeniable truth, though, that we can all agree on, no matter what side of the equation or what camp you're in, is that something needs to happen. There needs to be a catalyst. There needs to be a trigger of some sort. Now, step number one of a short squeeze, and the first battle that needs to be won, we have more than, at least as far as we know, based on the float, an official share count has never been done, which would be amazing if our silverback Adam Aaron would push this agenda and get this fucking done, get the facts made. What is the float and how much is owned by who? Because step number one, which we believe we have already accomplished, war number one, battle number one, is to own the float. We need to own a significant percentage of the float versus the short sellers. And as far as we know and as far as we believe, that mission has been well accomplished. Where it gets a little murky is with synthetics, failure delivers, all that kind of shit. As Lou says, excuse me, the fake Guatemalans. That's why we need a share count, because we don't know what actually exists. What's in the dark pools, what's not, what's on the books, what's not off the books, what's on the books, what's off the books, etc., etc. Step number one is done. Step number two is there needs to be a trigger. There needs to be a catalyst. There needs to be a pop, just like a pimple. I think I got one right there. We need to pop the bubble. Now, there's a lot of conjecture about this. There's a lot of people making calls. The thing is, and what's weird is, now, we're going to get into some market fundamentals right now. If you believe in, there's a thing called the efficient market hypothesis. Now, some investors are in this camp and some are not. Basically, the efficient market hypothesis states that markets and the price of securities are very efficient, very well-oiled machine, because all information about the market and the said security is public and known. Now, just for the record, I believe in efficient market hypothesis theory to a certain degree, because yes, most information is public and most information is known. Where I disagree with it is that things get missed. Sometimes there's things under stones that people haven't turned over, haven't looked at, and the market isn't maybe paying attention. So the efficient market hypothesis theory isn't exactly that efficient. Now, when it comes to our stock, the stock that we like the stock AMC, our favorite darling of the meme stocks and the short squeeze plays. One could be said that the efficient market hypothesis theory is very well in effect, because it is very well known what the short interest is. It's very well known what the days to cover are. It's very well known what the utilization rate is. It's very well known, supposedly, what percentage of the float our side, the winning side, the right side owns. So why hasn't it squeezed yet? It's a good, important question, isn't it? One that we can maybe look to the past for. Not that the past guarantees future results, because it doesn't. And that is one of the biggest lessons you need to know in the stock market, is past performance does not guarantee nor predict future results. But the past does leave clues. So let's look to arguably the biggest short squeeze of all time, and that is VW, ticker VW, Volkswagen. Now, Volkswagen, what I find interesting about the Volkswagen squeeze is only about 12.5% short interest. We're at what, like almost 20, around 20% right now, depending on how reliable the data and the source is. Volkswagen was only at a short interest of 12.5% to have its major squeeze that it had up to $1,000, or just over $1,000 US. Now, where things get interesting is the parallels. Volkswagen float was very much owned by the other side of the shorts. Porsche, whatever you say, I say Porsche, owned a very large stake in Volkswagen, as well as a shit ton of options to purchase additional shares, calls, not puts. The government also owned a very large percentage of that float. The European government, I believe it was. And then also things like BlackRock and Vanguard, because of the ETFs and because of having to maintain a certain level of what's the word I'm looking for? Not ownership, but exposure, I guess, maybe exposure. But anyways, the ETFs had to own to balance their books with their ETFs that track things like the DAX. They had to own a significant portion of Volkswagen to remain. I can't think of the word. Whatever, it'll come to me. Anyways, besides the point. There's a correct word for it. I just can't think of it right now. But anyways, long story short, a large portion was owned by the good side, not the short side. Now, Volkswagen, if you're familiar with the story, it had its bubble prick. It had its pop. Whether this was intentional or accidental, I believe Porsche knew exactly what they were doing. They were very smart because they were building their position quite significantly over time. The Sunday before markets opened Monday, Porsche put out a statement. And this is where I think, again, back to efficient market hypothesis, I think the market wasn't quite prepared or wasn't quite aware of what was actually going on, because Porsche put out a statement basically saying that we are aware, Porsche the company, we are aware that there is a significant short interest in this company. So what happened Monday morning? Panic. Panic ensued. The shorts got a little bit scared. They said, oh shit, you know, the rug's been pulled out. As Warren Buffett says, the tide has gone out and we have been discovered to be swimming naked. And they started to sell off their positions, which started the frenzy, right? Everything, as you know, as history will show, go back and look at it, the stock price rose exponentially for 2 to 4 days and then crashed back down to earth. So it's no different with AMC, our favorite meme stock, our favorite short squeeze play of this decade and this century. That was stupid to say. Volkswagen happened in this century as well. But what I'm trying to say is that what doesn't add up for me is it seems to be very common knowledge that the float is owned by us, or at least as we believe. It's very common knowledge, at least as we believe, that the share or the short interest is very high, even higher than Volkswagen was. Now, again, back to the float size, it was believed roughly at the time, with everything that I explained earlier, Volkswagen only about 1% of the float remained, which is why their squeeze was so intense. I guess history will yet to see. It will be yet to be seen what the true numbers are with AMC. But here we are. We have the float as far as we believe. There's a major short interest, but something hasn't quite pricked the bubble yet. And what I think it's going to be is, I don't know exactly what it's going to be, but like almost 9 times out of 10, 10 out of 10, what happens in markets is there is a moment of panic. Panic creates selling, selling creates chaos, and in our situation, potentially creates a major short squeeze and potentially the MOASS, the mother of all short squeezes. But as it sits right now, obviously there is no panic on the other side. There's our side, the good side, and there's the bad side, the short side. Obviously there is no panic on that side yet, they are comfortable in their positions because they haven't sold yet. Something hasn't triggered them to say, oh shit, we need to close these fucking positions and now we need to get the fuck out and minimize losses. That's what needs to happen in order to trigger the squeeze. There needs to be a change, whether it's in market sentiment, economic sentiment, geopolitical risk sentiment, whether it's, some people are going to like this, whether it's actual stock fundamentals, because fundamentals, you know, even though we know this isn't a fundamental play, that side thinks it is, and some people do think it is. So maybe there's a change in the fundamentals of the stock. Again, we don't know, but there has to be something that causes panic on that side that has them say, oh shit, we better get the fuck out now and lock this shit in. So that is what I believe based on everything that I know and understand about the market, which I'm not going to claim I know everything. I know quite a bit. I've educated myself quite a bit, even way before all of this shit happened. So this video has been a little random walk down Wall Street. That's a book reference, by the way. If you haven't read that book, you should. Burton, is it Macau? I don't know how to pronounce his name, but anyways, it's a book you should read. It's one of the many books you should read. So that is my understanding, and that's what I believe. There's going to be, we don't know what it's going to be. We don't know when it's going to be, but there has to be something that changes the sentiment on that other side where they panic and they fucking sell. And when they sell, it's going to be a fucking stampede. That's how I think it's going to go down. I think it's going to be, and I've been saying this, I'm not just saying this because of whatever Lou says in his videos. I don't even watch that many, of Lou's videos. If you go back into the Ape Father comments months and months ago, look up Craig Stryer. That's who I am, Craig Stryer. I have mentioned this many times. I think it's going to be a stampede for the exit, as all short squeezes are. We are 500,000 some people. We're actually way more than that, but just let's use an analogy of, say, football. The Super Bowl just ended. Let's say this is a 100, 200,000 person stadium. We're all sitting in it, and there is only one exit out the door, and the fucking building is on fire. That is what it's going to be like, whether you think or like that or not. I don't necessarily agree with Lou. I don't think it's going to be a managed event. The reason why I don't think it's going to be a managed event, I don't think it's in this country's and this economy's and the way that these markets run. I don't think it's in their best interest to make this a managed event, because, you know, we need to let things happen, even though, God, this is opening up such a can of worms. Because in the past, things haven't, the free market hasn't run like it should and should have done, like 2008, 2009, perfect example. The government did get involved. So I don't know, maybe there will be some government involvement in this, but I don't think there's going to be. I think it's going to be very quick. I think there's going to be something that triggers the panic. Their side sells, and in a couple days, this thing runs the fuck up and then comes back down. I don't think the government's going to have to get involved in this and make it a managed event. I think what Lou's saying with a managed event is that the government might say, guys, the gig's up. You got to close out your positions. You got to get the fuck out. It's, you know, the music stopped. Enough's enough. You've way fucked this up. It's time to face the music. It's time to close positions. That's what I think Lou says when he says a managed event, is that the government is going to essentially trigger this thing because it's time to pay the piper. I don't know. I don't know how I feel about that. I don't think it's going to be a managed event personally, and I don't think it should be a managed event. I think we need to restore faith in these markets and in this economy and in the free market and in capitalism. And I think we need to let things happen as they happen. Because the truth is, this whole theory of it destroying the economy and it becoming $100 trillion market cap or whatever the fuck the numbers are, let's be honest, guys. Not everybody, not even close to everybody is going to hold to even 10,000, let alone 20, 50, 100,000 if it hits those numbers. I think a lot of people are going to be selling 800, 1,000, or whatever it hits. There's going to be a lot of people selling very early. There will be a very, 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 very small percentage of people that actually hold to those numbers. So I don't think it's going to make the catastrophic numbers with market cap and ruining the economy, collapsing the dollar, and all these fucking predictions people are making. So those are my thoughts. What do you guys think? Let me know in the comments below. Let's talk about it. Peace.